Alright, I'm gonna try something different today. Today I want to personally talk to each one of you that for one reason or another feels behind in investing. The reason why I'm doing this is because I feel it too, most of the time. I'm 37, I don't know if you know that, and even though I shouldn't complain now, there are many people that are younger than me and they are millionaires or have a much more generous portfolio than mine. I'm sure that among you there are also some people that are better off than me, some not, some are younger but never studied, and some are older but don't have enough. I want you to know that you're not alone. A Bankrate survey from August 2024 found that 57% of American workers feel behind on their retirement savings. In my particular case, the reason why I feel behind sometimes is because I started extremely late in life. And partially also because with family, house and responsibility, and now kids on the way, I know that the older I get, the harder it will be for me to save and invest much. Still, I feel that I'm at the point now that I have full control over my financial direction in life. I managed to get to around $300,000 plus my equity in my apartment, and I know exactly what gives me the security I feel. So I'd like to use this video to tell you about how I personally prevent myself from worrying too much about my future, how I manage to always feel good about my investing journey now, and how I plan to reach financial freedom sooner than later. And I hope this is going to help you if you, for any reason, feel behind in investing at any point in life. Now, just as probably all worries and fears in the world, even for investing, the stress comes from the unknown. It comes from the feeling that you don't know if you're doing the right thing or not. Hope it makes sense to you. The anxiety you might feel doesn't come from the fact that you don't have enough saved, but from the fact that you're not able to define a plan or a strategy and you don't have that feeling of, all right, this works for me, let me follow it step by step and I'll be financially secure. For example, no matter if you're 40 or 50 and you have no money saved, if I were to present to you a full financial plan with which you'll be guaranteed to be financially secure in retirement, and I describe to you all the single steps that you need to follow to get there, the anxiety would be gone. You'd know you get where you want, and even with no money, you'd feel better. But the fact is, most people don't have a defined plan. Even with a 401k or an IRA, people still feel behind. So I believe, and it really helped me along the way, that an important part of the plan is knowing where you should be so that you can plan how to get there. So the first thing I personally do to feel in control and that I'm getting to my goal, and I assure you it works wonders, is to track my income and my expenses. Firstly, because I found out exactly where my money goes. And even that, by the way, makes me much less anxious just because of the fact that I know what I spend my money on. And second, after 1 year, I have a perfect picture of what I spent and what I put aside on average. And this is my basis to say, okay, $1,000 a month is what I put aside per month on average, just as an example. So with this, assuming I invest in a total stock market and I get 10% per year, I would need X years to get to my goal. This already helps me feel better because it puts numbers into perspective and grounds them in reality. By the way, I use an expense tracker that I created for me a while ago, and now I make it available to all of you for free. So if you'd like to use it, grab your copy for free from the description below. In case you're 50 or older, another thing that I suggest you to do is to estimate your retirement income. Online calculators will give you a ballpark, and for an estimation, you can use the calculator of the US Social Security website that I will link in the description below. Now, among all the Google files that I created, this compound interest calculator is probably the one that my viewers download the most. And I think because, just like me, you also want to see how fast you can get to your goal. This is another reason why we feel behind if you think about it. Not necessarily because of where we stand, but because we don't know how long the path is going to be. Does it make sense? If you know how long you have to walk, you already feel closer to your goal. So this Google file that I created is free to download from the description below, and it's going to help you to calculate how much you need to invest from now on in order to be able to achieve your goal in your specific time frame. Remember that each person has its own goal, and if you're really behind, sometimes resizing your goal helps you more than setting an unrealistic goal. For this particular exercise, we're going to use the reverse calculator here. And what we do is we basically write what our goal is and how much time we have. And the tool tells you how much you're supposed to invest every month to get to your goal in the time frame that you have available. So if right now you have $1,000 saved, your goal is to have $1 million and you have 35 years in front of you to invest. With an average inflation of 3% per year, you need to invest $733 per month in order to achieve a $2,800,000 roughly in 35 years, which because of inflation is going to have the same buying power of $1 million today. The interesting thing about this method is that we consider inflation. So if you've heard people that say, investing in the stock market is useless because by the time you get rich, your money is worth nothing because of inflation. Well, this is not true. And this table shows you that you don't need to invest thousands and thousands of dollars every month to end up with a portfolio that, despite inflation, makes you a real millionaire. So when I did this exercise for the first time, I wrote my goal, I saw how many years I needed, and I already felt better. Until I saw some guys on YouTube that were younger than me and had $500,000 invested. Yeah, I know, that's a typical issue. No matter what you have, there is always somebody that has more than you, and also somebody that has less than you. But we're human, and for some damn reason, we only focus on who has it better. For example, once I've seen a YouTube short from Graham Stephan where he was showing he was making $2 million per year only on ad revenue, and God only knows how much he makes from sponsors on other things on top of that. And of course, I had to compare it with my YouTube channel that brings me around $150 per month. Great. Now, you won't believe it, but that video got really stuck in my mind, and from time to time it pops up in my mind and I think, I need to work a regular job plus break my back every night and on weekends to create YouTube videos, all to make in 1 year what this guy makes in 3 days. Still, that's the way it is. Life doesn't create equal opportunities. You need to accept that. You can do your best and you can try to create your own opportunities, but there is only one Elon Musk in the world, so most likely you're going to have to deal with the fact that millions of other people will achieve much more than you in life. But that's a trap, you see. It's not about the fact that some people have more money than you. It's about the fact that you think about it. No matter how much money you have, you can always feel bad because the grass is always greener on the other side. And no matter how poor you are or full of debt, you're always going to find people that are poorer than you. I know it's completely hard not to compare yourself to others financially, and I know that I will also fall into this trap many times in the future. But really, every time you do, remember that there are thousands of people that are having a harder life than you. This is not going to change your financial situation, of course, but it's definitely going to change your perspective about it, and it's going to help you live better. Imagine that in the United States, according to the Census Bureau, in 2021, 38 million people were living in poverty. That's more than 1 every 10 people. So if you don't live in poverty, you're already extremely lucky. Besides, according to the Fed, over 50% of Americans has credit card debt, and the average balance is over $7,000. Most of these people have zero savings. So even if you started late with investing, you have to realize that you're already doing much more than half of the population. Now, another way of thinking that helps me stay positive, and my honest tip to you, always think about this if you think you're late, comes from the old saying, the best time to invest was yesterday, the next best is today. It doesn't matter if yesterday you were still spending, today you're going to become an investor. Even if you started late, you're going to end up much better off than most other investors if you just stay invested. In fact, when the stock market gets scary, many investors run away. You remember February this year, right? Trump announced the tariffs and the market plunged and everybody started selling. Now, all those people that sold lost a lot of money. And these kinds of crashes come every couple of years. But you don't have to act like them. What happened this year shows something that is historically true for the stock market. And that is that the sharpest percentage drops and the largest percentage gains are often not far apart. You get a big drop, most likely soon there is going to be a big growth. For that reason, walking away from the market after a big drop could mean missing out on the market's best days. In fact, look at this. From 1990 to 2024, if you stayed fully invested in the market, you'd have gained 9.8% per year on average. By missing just the best day of the year every year, you'd have 6.1% per year. And by just missing the 2 best days per year, you would get 3%. Think about it. 3% against 9.8%, only because you missed 2 days in a year, the 2 best days. So know that most of the people that started investing before you are probably gonna make mistakes like this, because most people do. So even if you started later in life, by just understanding that you should never get out of the market, you're most likely going to catch up pretty soon. Over a 30-year period ending in 2021, the average equity fund investor made 7.13% versus 10.65% of the S&P 500. 3% doesn't seem much until you realize that the average investor ends up with $800,000 at the end of the period, while the S&P 500 would have returned over $2 million in the same time period. Don't make it complicated, don't risk too much, invest the same amount every month in an index fund or ETF like the total stock market, and you're going to have a bright future. And if you don't have a huge amount to invest every month, It doesn't matter. Start with what you have. Even small amounts matter thanks to compounding. Small, consistent investments grow substantially over time. You're going to see a lot of resistance at the beginning, but the longer you invest, the faster your net worth is going to grow. Investing just $100 per month at a 10% annual return can grow to over $20,000 in 10 years, over $75,000 in 20 years, $226,000 in 30 years. Just to give you an idea, let's say you save $10,000 per year. To get to your first $100,000, you're going to need 7.8 years. But to get 100,000 more, you're just going to need 5.1 years more, then 3.8, 3, and then less and less as the net worth grows. And this is, by the way, assuming that you always save the same amount every year. In reality, usually you manage to invest more and more if you can increase your salary over time. One rule you can always remember, because it's easy, is the so-called rule of 72. This helps you calculate how fast you can double your money with investing. So let's say that the market returns 10% per year. If you divide 72 by 10, you see that you need 7.2 years to double your money. If the return you expect is 5%, then you just divide 72 by 5 and you always get this number of years. Now, I told you before that I'm 37, and obviously I wonder too if I started too late maybe, since I could have started 20 years ago and I didn't. It's easy to think that you're late if you see younger people than you that are already into investing. And when I fall into this trap of feeling bad about it, I always remind myself something. You should always consider the strengths that you gain with your age. Remember, for any age, you're going to have an edge. By starting investing as a young person, you have more time, true, but when you're older, you have more capital, more discipline, and usually more clarity. Firstly, because as you progress in your career, you often accumulate more wealth. This capital makes you invest more, so you're gonna catch up faster and reach your goals faster than you think. Besides, with age comes experience. Older investors are more disciplined, make less mistakes, and can more easily stick to long-term strategies without impulsive decisions. Now, these are all different thoughts that I use myself every time I feel I'm behind in investing. And it does help me a lot, honestly. But still, I don't believe I'm here only to help you not feel bad. Hopefully, I'm also here to help you do the right thing to feel much better financially. So to conclude the video, I'd like to give you a couple of tips that can help you achieve your financial goal much faster. So first, increasing your savings rate temporarily can make a huge difference. Even boosting your monthly contribution by 20 or 30% for a limited time by making sacrifices and giving up things can accelerate your progress tremendously. The power of compounding means those extra amounts don't just add up, but they grow exponentially over time. Next, you should optimize your expenses for the long term. You might not be able to cut them as you did temporarily, and it also doesn't mean cutting out everything fun or living like a monk. Still, make the effort to identify some areas in your life where you can reduce unnecessary costs. Small changes in your spending habits can free up a surprising amount of capital that you can actually use for investing. And finally, consider side income opportunities. Think about starting a business, or if you are risk averse, you can do some freelance work. If you combine these strategies, saving more, spending smarter, and earning extra, you're going to accelerate the whole process, and you're most likely going to see that even if you're late, there is a lot you can achieve. Remember, investing is not about perfection or by being the first. It's about progress. You learn, adjust, and improve as you go. And yes, starting late can feel intimidating, or you can feel like you want to give up, but every step forward counts. Even small, consistent actions today can compound into significant results down the road. So, my dear investor, we are on a wonderful journey towards financial freedom. Some of us started early, some later, but all of us are walking a rewarding path, one that will bring us a lot of help and satisfaction in life.